Welcome to the Forex, and here we're looking at the US dollar, and we're looking for it to, move up to 80, and it still hasn't completed its structure to the upside. We can see that this little first move here would be wave 1, and all of this would be wave 3 here in terms of 1, 2, 3, 4, and 5 here. So expect a move above these highs here into the 80, then another little correction, then another little move up here that would probably go into group 1. And group 1 is 10, 20, and 30. Wouldn't go above the 130, the 80-30 at this stage, but basically an A wave up to here in 3 waves or 5 waves, and then an A and a B and a C that can pull back 50 or 60%. But I think group 2 should support it, and then we'll see another move up. So in a bit of a nutshell, we would be looking at 1, 2, 3, which could end there, but we could have 4 and 5 to here, then the A, the B, and the C here, and then another move up through to here to make the wave 4. At the same time, we've got the euro here off its low here yesterday, just on the sort of intraday here, off this low here. This move here is in 3 waves, so it's corrective, and whatever happens here would still be part of being corrective. Now, being corrective, that means that this low here would be taken out. That the point that I wanted to make here is that corrections can increase in size, so it may be the case that this becomes, instead of having the little A, B, and C here, we would have the B wave to here, the A wave up here, and the C wave up here. And then this makes little A, B, C for the A wave, an A and a B and a C for the B wave here, and then up for the C wave here. So it's just a larger correction. So the way to handle this is that if the 137.5, the midpoint here, 5 becomes the retested resistance, then look for a short down to the top of group 1 down through to here. On the upside here, if the market does move up, then we'll be looking in 5 waves to the upside. And normally the wave A here and wave C have some sort of equality there. So you'd be looking at 137.80, but you've got 772 here, which 772, 272 carry more weight than a normal 72. So that's where the supply is. So it will struggle at that point there. The Australian dollar, we've got mining looking quite strong at the moment, with copper moving up quite strongly. So the Australian dollar can be used for entry into China from Asia. But we've also got Smoke and Joe today, given his piece on the budget. So I'm not sure how that affects everything. But as far as I can see this so far here, this little move on the 30-minute chart here, the move up off 92 here is in 5 waves. So we've got the 1, the 2, the 3, the 4, and the 5. Nice, reasonably clean 5-wave structure. So after 5 waves becomes a ABC structure, and that's unfolding now in terms of the A wave, the B wave. Now it can pull back to the 93 here, which is the 50, and the 61.8 retracement level here. I don't think that's the case, because I think that the wave 4 of 1 lesser degree here would be the nice support area through here. So in terms of trading, I would suggest that if the 93.72 up here becomes the support, trade long, and otherwise just allow this wave C to unfold here. A wave C would be in 5 waves, so we'd be looking at something like 1, 2, 3, 4, 5, something like that, and then a move higher from that point there. So bit of a rock and a hard place at the moment, because it just may not have finished. It may not come back this far. It may just come back this far. So if it does come down through here, anywhere down here, then use the midpoint. So if the market comes down through the midpoint and then finds the midpoint as support, then you want to go along from that point. And the same with down here as well. If it comes down past the 93.20 here, but doesn't go below the 93, then comes back and finds support on top of group 1, which would be 93.30, then use that the 93.30 to go long on and the 50, so the 3, the 5, and so forth. But if it doesn't come down here at all and for whatever reason just pushes straight up here, then the 93.72 is where you want to be looking to be long at. And of course, too, if this count is correct, then if this is wave 1 and this is wave 2 here, then the wave 3 should be quite strong to the upside. Currently on the daily, it's oversold, and this was a sort of target area that we were looking for here, so it could fail from here, but I'm not sort of interested in that unless the 93 becomes a retested resistance and can't get up from that point. And in the bigger picture, we're using the levels, the 92, well, 91, 92 and 93 are all minor group 1, and 92 would have to become the retested resistance before I'd call it in as a bear market and a failure at that point. Otherwise, we're looking at this low here being, the wave 4 low. Right. The Euro Australian, not a lot to sort of report here, except that probably a good idea to cover shorts into this area here. On the daily, it's oversold. Yes, it's got further to go down. The 38.2 retracement level comes in at 14772 area through here, or the wave 4 of 1 lesser degree. So, yeah, it might be best to cover the shorts in here if you're shorting from the 149. The pound yen is looking strong, and the main point here, well, 2 points really, well, 3 really, is that it's above 72, number one, so that puts it in my book on the positive side. The point 2 is that this does appear to be impulsive in 5 waves to the upside here, so it could move higher as well, but it could also move back through to here, and we'll talk about that in a moment. The other point here is that because it's moved up here and it's sort of overlapped these structures here, it means that I can call this in here as an A wave, a B wave, and a C wave here in 5 waves, 1, 2, 3, 4, and 5 here. It's overlapped here. So this is a positive move to the upside. So it's a matter of finding a way in long through here. So look, group 1, which is 172.30, where it's trading now, if it finds a retested support on that, then look to trade long off that. If not, then it's likely to correct. It can come back to 171.80 and 171.72 area here, the group 2 here. So it can come back to this where the next level of support is through here. Of course, there's support here at 172, so it may not come through that either, but it could come back here. So you can look at 50-60% retracement level from here, or even it made another high here and then looked like it was coming back, then you do the same thing as well. So any longs you put here, you'd have to have the stop out of the way here and look to add on 172.50 and so forth and build it to the upside. The daily is on your side as well. It's over sold at this point here, so it can trigger in as well. The euro yen not doing much, just sitting on the 140. So we covered shorts at the 140, looking for it to move back up. But look, it's going to be a hell of a drag for it because the 141 is really strong resistance, and so is the 142. So I wouldn't look at trading this market. If anything, if the 140 became the retested resistance, would look to short this market. But I think there's better markets around. Alrighty, I think that's it really. And as I mentioned yesterday, it's really got to do with a lot of it's got to do with the US dollar moving up in 3 waves, and it's only in its first leg to the upside at the moment where it's hit 80. So it will, start to vibrate around that 80 there, which of course will reflect back into other commodities. So just bear that in mind for that. All right, cheers.